So after switching to futures, we did something outrageous, bro. So right now we're up $4,000 in overall P&L on all three accounts on futures. So as you guys already know, I switched to futures a week ago. We got funded over 150K last week, and now we're up over $4,000 on all those prop firms combined, which is just outrageous. It just shows you how quickly you can make profits when it comes to futures prop firm, especially the fact that they only have one phase accounts. But without further ado, let's get into the overall chart breakdown, guys. Okay, hello guys, welcome back to another video. We're going to be doing a breakdown of the three trades we took this week, and we're currently up $4,000 on these funded accounts, and the fact that I literally just switched to futures is just outrageous. So let me start with our alpha ticks account. As a matter of fact, let me turn on the lights for you guys. Start with our alpha futures account. So obviously remember we have two accounts on alpha futures. So anything that you see on right here, it's doubled, so that's $2,552.04. Yeah, so $2,552 made on alpha futures, because remember we have two accounts. Let me go to the next one right here. And then for topstep as well, we've made over, for the past 2 days we made, let me see exactly, 1,342. So overall, if you add both, that's like 3,800 and something dollars. So over $4,000 almost that's been made in the past 3 days, which I think is outrageous. I don't think you guys see how sick that is. The fact that I literally just switched to futures, got funded, and made that already. But anyways, the trades that we took, I already break down one of them in my last video, so I'm going to break down the other two that we took. Let me add back my fibs as well, because I did analyze it for my team. But we took this trade from the 61.80% level. Remember, we always took more, our high probability setups are always taken based off the 61.80. Why? We have a better risk to reward, and that's a deep retracement. So we can see price tapped into that 61.80% level. I normally enter on the 1 minute so I can get the best possible entry and the best risk to reward. So you can see I entered right here after that bullish engulfing when it finally broke both EMAs, and that's my overall trading model. EMAs need to be broken, structure has to be being maintained. So that means if we're in a bullish trend, I have to see structure being maintained bullish. If I see any bearish momentum or anything like that, I'm not going to instantly just change my bias, but I'm going to be paying a lot of attention to that overall structure. We can see we had an impulsive push when New York Stock Exchange opened, but we did retrace back to the 61.80, which ended up making us stay the trade, and we made over a 3.83 to 1, basically a 4 to 1 on that position. So the where I exactly came out on the trade, I think I came out at the 0% level if I'm correct. Yeah, so you can see we took it from the 600.80 and we exited the trade at the 0% level, which is our previous high. So we got that daily high got wiped out, which is Monday's daily high last week, Monday the 22nd. Well, wait, it's actually this Monday the 22nd high got wiped out. Can see right there, and then after that high got wiped out, we did target the negative 27% level, but I did not hold to that level. Why? Due to all the consolidation that was happening, I decided to just close. The next trade that we took, which was today, which is on Wednesday, again it all comes back to fibs. I take my trade from my Fibonacci level. This one we're going to be taking from the impulsive push, which is our swing low, to the swing high. So we're drawing that base of the 4-hour push right here, and we can see that came right back at the 61.80 again for another deep retracement, which is, these are our ideal setup. However, I did not enter at this point. Why? It was too impulsive. The moment market was opened, we got this impulsive push. I decided to have patience and wait, and we did get a better entry at this area of interest. If you notice, this area of interest is in yellow. Where that's coming from is an overall 4-hour exhaustion. So we can see we had a strong, give me a second, let me make sure this. So okay, we'll take off the camera, but you can see right at this area of interest, let me mark it out for you guys, we had strong sellers that stepped in at this area of interest. Right here again, we had massive sellers that stepped in, which tells me that more than likely there's going to be a lot of buyers at that area of interest when it gets broken. After that level was broken, you can see my entry on the 1 minute time frame again right here, which I then targeted this negative 27% level, which led us to getting another 4 to 1, which is just crazy. Literally 3 days straight, we've been averaging at least 3.5 risk to reward on every single trade. And that's how I literally made 4K in just 2 weeks. Last week I took to pass the account, got funded 150K. This week I made $4,000 by literally just following my trading model. If you guys want a little bit more breakdown on how I trade and what I look for, because obviously it's not just Fibonacci, it's not just exhaustion, there's a lot more that goes into it, like run psychological levels, the EMAs, I use all these stuff. You guys can comment that and let me know. I will do a overall breakdown of my overall model. I don't have a strategy, I have a model, because when it comes to a strategy, it's more set and defined by certain rules. The market changes every single day, so you can't have certain rules. Certain rules are not going to be maintained 24/7 because the market is dynamic. That's like trying to tame a bull that's not supposed to be tamed. So I don't go based off a strategy, I go based off an overall trading model. But a model, if you guys want to see how I catch these huge risk reward trade every single week. But that's it. My name is Akeem FX, and I'll see you guys in the next one.